What's going on out there? It's August 24th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break the headlines and tell you what's really moving these markets. If you watch on our YouTube channel, you could see our new backdrops, which we displayed at our last conference, which is this past weekend. Nice light colors instead of the dark colors. But Daniel Creech, who's here with me, senior research analyst, Curzio Research, has the dark colors behind him. So we got to switch them out pretty soon.
I look good with dark colors, Frank. Yeah, Happy Wednesday, sir. Best day of the week.
Thank you very, very much. Sorry to say that I know, Daniel, that you have some back problems, and I said that maybe that's because you've been golfing 4 times a week and you got to stop. And since I've been away at conferences a lot in the past month or so, good. I'm not. I don't feel too bad for you because you have these back problems, but maybe you should stop playing golf a little bit.
Well, I just need to stretch more. It is undisclosed rumor that I do get to play a lot more golf when Frank's out of town. I love covering the podcast and you doing boots on the ground so I can stay here and hold down the island. Yeah, I tweaked something. I don't know, but I'm all right. I'm getting older, but I'm going to make it.
And the funny thing is I have a membership over here, and so Daniel goes there and says, yeah. And what they say to you? It's so funny.
Well, when you make a tea time, Frank gets the email confirmation, not me. And so if Frank's on the road, he's like, hey, what do you do? Do you get everything done? It's like, yep, got everything done. Everything's good at the office. I'm on the golf course. And then they email Frank, oh, hey, your tea time is at whatever. Yeah, you can't sneak around. Big Brother's always watching, Frank. It's terrible.
This way. And I make sure when he is on a golf course on my way, I'm going to make sure I call you a lot.
Yeah.
So, hey, what are you doing? Can you do that? That's
anyway.
Great, though. Anyway, in all serious, we work very, very hard here. It's work hard, play hard, which is cool. That's the environment. And I just want to thank my team doing a fantastic job, which is really cool. So, Dan, what's going on? How's everything, man?
It's good. Yeah, some things are moving around. We got some things to talk about. I want to talk about the Fed a little bit. Mm-hmm. I don't know if we need to talk about the meme stocks, but AMC's going crazy down to the downside. So we have to take a victory lap. Last week, we told people in Bed Bath & Beyond, not AMC, but Bed Bath & Beyond, we said to take profits because it's a trading game. I think we can lump AMC into that personally, but it's been in the news. Would you even trade that for fun, or do you do other things for fun?
Man, I can't tell you how many people came up to me and tell me that they own those two stocks, especially at the conferences and just people emailing me. Oh, by the way, you're doing a great job. Plus, I own Bed Bath & Beyond. It's trading. Like if you're a trader, fine, do what you got to do. And who am I to tell you not to buy it or sell it since it went up 300% in 1 week and then it fell tremendously if you shorted it. But just realize that there's a very good shot that Bed Bath & Beyond, also AMC, Bed Bath & Beyond is going to go out of business pretty soon. So it just doesn't look good. I know that it's up today. They got, a little bit of a lifeline thrown in terms of a little credit. But, there's a company that's in trouble when you really look under the hood. But who knows? I mean, it could push higher. But, it is dangerous. I'm not here to teach you how to be an investor. I know everyone that's bought those stocks, and almost everyone has gotten annihilated. You might have hit this uptrend or whatever, but everyone that I've talked to in the past 2 years, the meme stocks going through the roof, and I own these and all the speculative and ESG names and all the bullshit and all the trading and all the YouTube channels, they've gotten completely annihilated, right, in this downturn, because those are the stocks that went down 80% plus, while the rest of the market right now is probably down around, NASDAQ is down about 20%. But yeah, it's kind of crazy, and those are the people I met at the conference, by the way, I should go there. I said I would talk about it a little bit. So let me just say that, it was fantastic. I mean, for us, Daniel, we met a ton of influencers, great people creating interesting NFT projects, which are not just, JPEGs, right? This is like giving them access. I hosted 2 panels with a lot of great entrepreneurs on them. But what I'm seeing specifically is people between 25 and 40. And 40 are millennials, by the way. Either creating great content, which is why they have hundreds of thousands, some of them millions of followers. The developers creating incredible things, usually through the Unreal and the Unity engines. Just so many cool ideas. Yet they don't know how to structure their company. They don't know how to monetize it. They don't know how to raise money that benefits investors, where, when you do a capital raise, you got to get investors in, but they're not structuring it where it really benefits them. And then finding difficulty in marketing themselves outside of their social media presence. So they're coming to us, and we're partnering with a lot of these companies and people, which is really cool. And it's leading to even more introductions every time we go to another one of these, crypto conferences. And these are real projects people know in the Web3 space, which is what it's doing for us is it's opening us our total addressable market to tens of millions of more people. And that's what we want to do, right? Because these are people that we could sell our products to. We have a lot of credibility in the space. They say yesterday we bought the real estate for $5 million. They just a sale, right? So it was a 254 by 254 plot for 7.5 million just sold. We own 11 of those. And that was the virtual real estate, commercial virtual real estate we bought TCG. So I'm glad a lot of the investors came in for that. I don't know where it's going to be next week. I don't know what's going to be next year. And I'm hoping that, these guys follow through and do what they're going to do. And I'm talking to them a lot, and I'm very excited about this. But yeah, it's just what's going on in this space, Daniel, is absolutely amazing. And I know it looks like, well, Frank, are you a detour here from We're not. It's just a whole audience of brilliant people of where the world is going, and you got to be a part of it, right? Someone's followed so many different trends so long. It's just these developers coming to us, right? Now we could sell some of this land and take profits a little bit. We could, work out an equity structure, revenue share model with developers and have them develop these properties. We could lease some of this, just really cool stuff that we could do. And the most important thing with the after parties. And one of the after parties,
of course.
After parties we went to were really cool. I mean, it was just, there's a bunch of rappers that were performing that I know. That guy Dill had on last week was performing, which is great. From the whole club, and was going crazy. And another one where it was a special event I was invited to, and it was like just 40 people. It was like a speakeasy type place, and they had a presentation of Louis XIII.
Ooh.
And they poured all these glasses for everybody, and they went through the whole history of it. It was amazing. The guy had gloves, so it was beautiful. It was really great, and he gave us all some and how to sip it and all this, and it was amazing. But it was just, a bottle of that I think goes for minimum $3,500. But more importantly is the people that I met there. These are a lot of Web3 people who are very successful, sold businesses, just a networking part where you look at tax consultants, lawyers, accountants. These are servicing some of the largest players in Web3. And I have to tell you, when we went there, everyone was seeking us, which is really cool. So we're starting to get a big name in that space, starting to add names. But it's a lot of fun. That's where the world is going. That's where I think you're going to make the most money. But still, we do focus on stocks and the Fed and Jackson Hole and stuff like that, because I get those questions sometimes. And like you said, a big meeting that's coming, Daniel, right, is Jackson Hole.
Yeah, if you don't mind, before we get to that, and I'm not knee deep on the NFTs and a lot of that. I know a little bit to be dangerous, but from the conference, did you get the feeling like, you hear the Bitcoin conferences in Miami and things like that. The price of Bitcoin is always talked about. Would you feel or get the idea from the conference with the vibe or the attitudes of people that were quote unquote in a bear market, or did people care, or did you see? I'm not doing a good job of asking.
No,
this,
but I know what you see.
Was the atmosphere upbeat, even though it was crypto's down from highs and all that?
Incredibly upbeat. And the projects that these people have and the excitement and the energy in the room is incredible. You're not seeing people that are trading cryptos, right? These are guys that are going to NFTs and Metaverse, and you're seeing a lot of money in terms of funding flow hugely into this industry right now. Massive. And, I talked about in the past of the 120 billion, but it's coming from who? It's coming from the biggest companies in the world, right? Who are weird, who control the internet, right? So this is where they know where the Metaverse is going. And these people understand that the Metaverse is not a video game, right? NFTs are not about, this young thing. It's about ownership, locking in your intellectual property, owning it, right? Your own ownership of your digital content, which, we don't have right now. A lot of people don't have that. Most of us don't. And this is going to give you that opportunity. And just to see what people think and the perception of the Metaverse and NFTs compared to what I'm seeing and what I'm talking to on the ground. And guys, this is the research I've done in every single industry across the board. You go into conferences, you meet people, you're going out to dinners, you're getting drunk, you're hanging out with key players. You have to do this in every industry. That shows credibility. And also, you're investing. I'm spending money in it. So all these guys know that I'm serious. This isn't some idiot from Wall Street that's trying to get it. No. I'm learning from them as much as they're learning from me. And it's just incredible to see the excitement and the energy from these entrepreneurs. And I used to think they used to structure their tokens, because when you start a company and you're structuring a utility token, it has no utility. You don't have a lot of clients and you don't have revenue coming in. So the utility is really useless. But I thought they were doing it on purpose. They're not. They just don't understand that. And coming to us and say, no, we want to, this is about our investors. This is about our following. That's the responsibility of these people following us and seeing how they really care. And I'm like, that's your family. Like, the people who invested in Curzio Research are my family. Like, I want them to participate in the growth. I'm not just saying that. I'm not just bullshitting. It's true, because everybody who's helped me out, and investors that made money for me, every time they, entrepreneurs or whatever, go to launch another company, I'm writing a check for them every single time because they made me money. And I'm trying to tell them, like, don't think short term, think long term. And it's really incredible being around younger folks that are that energetic. It makes you feel alive. It really makes you
around
feel
me every day.
alive.
I understand that.
I mean, holy shit! It's like it really is. It's cool. I feel like a young kid until I get home, and then have a couple of beers, and then I'm an old man again, obviously. But I'm like,
so you
holy
go to bed
shit,
at 3 and get up at 7 and feel terrible.
Yeah, I'm like a mess, and I'm still recovering a little bit. But just hanging out with these guys and learning a lot and seeing how they work hard and play hard. They're some of them are bullshit projects, and it's easy to see that, based on my background and being doing this for a long time. But some of them are very,
but that's part of it. I mean, I'm biased towards the space too, as well as wanting it to take off and everything. But I do think that there's a lot to be said about the work ethic and the atmosphere and the attitude, even when prices are suppressed or maybe volume is down or whatever. It doesn't matter in the sense of it's not going away. And when CZ from Binance is great, he always posts basically the same thing on, hey, you continue to build in down markets, and you look ahead, and I think that's great. So, but I am. And that was
one of the panels I was on. It was like how to build your business in a bear market, right? So,
well, they were probably all ears and listening to you until you told them to give away equity. Then they're like, oh, I don't know about that.
I didn't. You know what? I was moderating it, and it's funny because we had an investor who was there. One of our investors, one of our subscribers there, and his name's Javier. I mentioned him yesterday, which is really cool. Hopefully doesn't mind mention his name, but he sold his production company, and he was showing me like all the work that he did. ESPN was it looked like it had 1,000 people. It's like, and there we go, like getting everybody up, like great MC and all,
that's
everything
awesome,
about that. And he was like, I'll introduce you, and I was like, that's a good idea because I'm a moderator, and it was an unorganized conference where no one's introducing me, and if you don't, I don't want to talk about you don't want to go up stage and say I did this or this, it just doesn't look good. And he came out, he introduced me, introduced everybody else, and then I had the panel right after. But it was just weird because there was a couple of young kids on that panel, and it's about how to survive in a bear market. I'm like, how many bear markets have these fucking guys been in? And they're like, well, but I talked to everyone before the panel, and they were like, well, we were in, the last one. I was like, we weren't in a bear market. We were in a bear market for a month. Seriously, it was a bear market for like a month and a half. That was it. And then the government said, okay, we're just going to spend an unlimited amount of money. And they're like, well, we helped these people and we did this. And, the stay at home and businesses, everybody did good. I mean, you could have sold whatever you wanted and stayed home and everybody did good. I mean, so for me, I was asking tough questions. And I'm like, if you're going to be in front of a crowd, you better know your shit. And, there was one person, you call out, and a couple of others were okay. But one of the guys who were on the panel was a major influencer and huge, sells billions of real estate, sells luxury real estate. I think it was overseas. Nunez was his last name, Alonso Nunez. I just met 80 people, and I didn't realize who he was because he got thrown on the panel, Daniel, like 1 second. Like, oh, this other guy's not going to make it, so here he is. And I'm talking to him. I'm like, great. I said, I don't even know this guy. And then I went up there and I said, by the way, this is what if Nunez. And I said, he just was added to the panel, and he said he's going to give everyone who came to this conference, came to this session, $1 million to start their own real estate portfolio. And he's looking at me laughing. I didn't even know anything about him. Then I found out afterwards. I'm like, wow, this guy's a monster. He's huge, a big following. And, it was just really cool, the conference all around. But, also people are worried, though. I mean, we're looking at just the conference was sold out. They had a few thousand people there. It was a good crowd. Again, a little bit unorganized, but those guys did a really good job. I know it was the first one, so that's what I expected. But overall, people were asking me about questions. What do you think about the Fed? Is that going to impact the markets and stuff like that? And for me, I think it is. That's why people are paying attention to Jackson Hole meeting, which I think is going to be a pretty big deal. And it should be a big deal because the things are changing right now a lot, Daniel. I know you're seeing at your end too, but the demand cycle, I mean, you're seeing demand absolutely fall off a cliff. I've never seen the housing market. I mean, holy shit, that happened so fast, so quickly. And it's not just that. I'm hearing it from my network, and I want to hear from you guys. I report what I hear and what I see. I don't care. Just like COVID, I'm going to tell you what I see, even though people had agenda and yelled at me and said, you're full of shit. Kids need to wear masks all day. They didn't know the stats. We knew the stats. We knew great doctors that were emailing me from everywhere. But now I'm getting emails saying just demand's starting to fall. It's starting to fall, and it's happening quick, just like it happened with the retailers, how fast that happened immediately. All of a sudden, they went from booming times and, solving their supply chain concerns to massive inventory. And holy shit, we got to sell it at huge discounts. You're seeing it in the semiconductor sector. You're seeing it in home builders now and all these suppliers and things like that. And there's still a shortage of workers out there, which is a little weird, but it's it's a crazy market where we're going into a recession. It's a guarantee. I mean, we're going into it. So, the Fed, it's going to be interesting because if they're really pedal to the metal, I know they're going to say one thing and, do another, but the Jackson Hole meeting, I don't know. What do you think they're going to say? I mean, everybody thinks probably just exactly what they just said at the last meeting and say, we're not seeing any signs of inflation moderating, which it's moderating freaking everywhere, almost everywhere. But let's see. I don't know. What are your thoughts?
I think that they're going to sound more hawkish. I mean, the futures fund rate, or the money betting on the next raise next month from the Fed, is basically split to 50 basis points or 75 basis points. They've done 75 back to back. They take August off because they work so hard they need a vacation. And I just don't see how they can't sound hawkish. And I don't believe it's going to happen in September, Frank, but I think October, the Fed is going to have to pivot and change their goal, move the goalpost once again. And I'm going to do my best here not to be just ranting on it, because I know you don't like it when people just blame the Fed, although you should, because they are the reason everything's screwed up. But it's the world we live in. Their goal right now, Frank, is to bring inflation to a target of what percentage? 2, right?
Mm-hmm.
We're at roughly 8, let's call it. Let's round down and say we're at 8. There is no way possible that you can get inflation down to 2% without A, demand falling off a cliff right now and prices just plummeting from recent highs much lower, or you have to raise interest rates several times in small increments or a few times in large chunks. I don't think they can do that. As we've talked about, you've done a great job highlighting this in the past. The economy would just crater if you really bump interest rates to 4%, let's call it.
Mm-hmm.
However, you also have to worry about, and I know nobody likes to, you can rant about this for the last 40 years, but at some point, government debt and the interest is going to come into play, because if the Fed fund rate gets real high, right now they're getting an easy window. And I say they, meaning the Treasury, because the Fed's rolling off their balance sheets. They're not buying as many bonds. However, you have huge tax revenue coming in right now, and that's helping the Treasury, and along with some cutting and spending from comparisons with COVID and stimulus checks. But if you continue to raise interest rates, the government's going to have to issue more debt just to pay the interest. At some point, that's going to cause headlines to get investors to fear. What the Fed will have to do soon is say, hey, our goal is no longer, this is my opinion, of course, our goal is no longer 2%, but they're going to bump it up to that, just like they said with transitory and all that. Well, it's going to be higher for longer. The initial reaction is going to be a knee-jerk reaction down, in my opinion, Frank, but not to make you take the other side, but how do you not change the goalpost of 2% inflation without raising and stalling the economy? You've talked great about, just look at the housing market. The ripple effects from the recent interest rate rise is not into effect yet.
No,
the spill has not made it downriver yet.
Mm-mm.
They're going to hike again in September, supposedly.
Mm-hmm.
That's going to be baked in over the next couple months. How do they not change the 2% goal? Or maybe they just do want to rip the Band-Aid off and
I don't know.
cause a recession.
Inflation's gonna fall a lot faster than anyone expects. And people are like, well, it just fell a little bit. We need to fall more. And then this quarter, you're gonna see, okay, it's starting. We're seeing numbers that are insanely crazy. And I know, you're looking at the CPI and rental income is going to be, people pay rental income, and it's not like it goes down month over month like home prices does. So that's going to be a key. And you have, higher food prices, and energy prices are probably still about 10% below than they were, I would say, last month. And I may be a little bit wrong on that, but I know they were above 100, and they started really crashing in the beginning of. They were down like 15% when they hit like 90, I think. So were they 94 or something like that? So probably like 10%. That'll help. But the CPI, it's going to fall. It's going to fall fast, a lot faster than anybody thinks. But I will tell you this. So let's go a little history of Jackson Hole, because this is where you have 120 economists, investors, members of the U.S. government, and journalists. All these people meet, right? It's like a high profile, high society thing. It's just. Everybody's stroking everybody else at this thing, all the rich billionaires and stuff. And then you have the economists just following everybody around and trying to get in with everybody and saying, I know this guy. And then, everybody has the same freaking opinion when you're an economist, right? That's why they're economists and not analysts. Are making a lot more money. Anyway, so this started in 1978 in Missouri, and just conversations on economic policy with all these people. And let's go back a little history lesson 2 years ago. Right. This is why people are like, this is so important, Jackson. No, we got to pay attention. I don't know. I mean, you got to pay attention, because maybe you should do the exact opposite of what Powell has been saying. Because let's go back 2 years, because he announced the Fed has a new model, a brand new model for assessing how and when to raise interest rates, saying it would no longer do so just because joblessness was falling and inflation was expected to heat up. So basically, Powell's like, I'm not raising rates in the face I'm not going to raise rates when we see higher inflation. That was 2 years ago. He actually said that. And then last year comes along. So now inflation's starting to heat up. And Powell had this whole presentation, this whole thing, and people said, okay, Jackson, and he laid out all the reasons that inflation is going to be a temporary phenomenon. It's going to come down really quick. A lot of this results in large part from the reopening of the global economy after the pandemic. It's going to be transitory. You have nothing to worry about. Those are the last 2 years. So if you're really concerned about what he's going to say, you should be. But probably if he says and goes on there and says, listen, I'm not seeing any signs inflation's moderating. We're pedal to the metal. We're going to continue to raise interest rates. After that initial reaction, which might be, a little bit pullback in stocks, I think that's expected. So I don't know. I think it's factored in why we've seen, 3 days. 3 straight days, down days after, a nice run up since, mid-July. But I'd probably do the opposite and buy stocks because just do the opposite of what this guy says. So it's important. But for me, I like credibility. Like, you got to go back and look at what people said. And that's what I freaking hate. Because all these economists that are saying, we got to go to 4%, they were saying that it was transitory and they were saying we're going to rate. And this is February, March. That we're going to get 3 rate hikes. This is Goldman to 4 rate hikes. JP Morgan to rate. Everyone 3. No one had all these. And then 3 rate hikes is 325 basis point rate hikes because that's what it was. That's what it was, Daniel, back then. Like, 3 rate hikes, 4 rate hikes. When we talked about rate hikes, we talked about 25 basis point hikes. Nobody imagined. Remember, he's like 50 base, 75 is off the table. No, that's what he originally said. Then he went 50 basis point hike. Then it's 75 at a 75. It's never been done since 1994. There's going to be a lot of shit going on. Okay, you're going to see a lot of craziness, and it happens quickly. The housing market does not go into recession this fast. It doesn't happen with unless you have something crazy happen. This is crazy. This is unprecedented. Just like you're spending $11 trillion, you were behind the curve. Now you're trying to get ahead of the curve. You're going to see these massive swings. With that said, talk about some of the things that you've been doing because I thought that it was awesome. We talked about this offline. Let's bring it because people are probably like, how do we invest in this type of market?
Right. And so you must pay attention to things like this because it, as Frank said, it's basically the Wizard of Oz behind the curtain. However, don't let that scare you to the point where you're on the sidelines. And I was doing some screens the other day, Frank, and I was looking at stocks. There's a couple of caveats here because there's a lot of acquisition companies and kind of just holding companies that can mislead this. But I wanted to go over a list with you and see if you're surprised or not shocked about this. And this is just a easy shopping list for all investors out there. And warning, this is going to be boring, but the big takeaway here is to focus on great businesses and no matter what economic conditions, because the odds of you making money are good. Frank, if you look at companies that are within 5% of their 52-week highs, their market cap is at least $400 million. I just limited to major U.S. exchanges because you can get a lot of overseas listings and things like that. Not that they're bad, just keeping things simple. And the only other thing I added to this screen was in the last 12 months, you had basic EPS, earnings per share, excluding items. I know that's a little bit of a gray area. Won't get into that, of at least 10 cents because I didn't want a lot of growth companies and all that. Here are companies, Frank, trading below or within 5% of their 52-week highs. And now remember, why am I pointing this out? Because we've gone from 20 to 30% down to a rally of the S&P rallied 16% off its lows recently. Yeah, and then we go down 2% in a day to start the week. So one of the best well-run companies we've talked, AutoZone is on there. That probably doesn't surprise you. Northrop Grumman.
Defense, yeah.
Defense, that doesn't shock you either.
No.
Humana, remember Humana's our old favorite? I think I talked you into selling that. That was a mistake.
No,
HUM, that thing is amazing.
That crashed and stayed low. I think we bought it. I wanted to say at 250 and it was up to 400 and it fell. It fell and stayed there. And even so, when COVID really, the rebound in COVID, it was one of the stocks I looked at never came back. But now I don't know. I haven't looked at the past few months.
Yeah, it's been
great. So healthcare,
a lot of energy companies, Murphy, Chesapeake, CHK, oil and gas. Occidental Petroleum, we know Buffett is now going past 20%, filed to get 50%.
Oil companies are interesting, right? Because we saw oil at 130 and then fall a little bit below 90. It's, 93, 94, still near the low end of the trend. but we've seen an incredible rebound in oil stocks, right? You can't deny that.
I don't know if you have charts up, but Devon Energy is, I think its recent highs were around $80 a share, if memory serves me correct. It's still well off, but like ExxonMobil, it's 6-7% off its recent highs, and oil is 95 instead of 130. Yeah, I mean, oil stocks are doing very well, even as
Devon has come back. I'm going to put up a chart here for you guys to see if you're on a YouTube channel.
Was it 80? Am I way off with recent highs around 80?
No, you're not off. It was pretty close to 80.
Okay.
The highs like 70.
But it fell to like 50, didn't it?
So it fell. This is only a 6-month chart. Wow. So in 6 months, let's go back to March. It was 55 in March. Popped in, this is June, to close to 80. And this is June 8th. And then when you look just less than a month later, it was 50. Holy cow. And now it's back up to 71.
Yeah.
I mean, these, holy cow, just it's, I mean, you go back
Exxon
further.
is the same way, not near as volatile, but ExxonMobil is, I think, 7% below its recent highs. Again, though, when you look at, even if you bought at the highs in oil tanks, yeah, it's painful for a short time, but those are coming back and the fundamentals are still there.
Yeah.
Another one, Casey's General Stores. You ever been to a Casey's General Store, Frank?
No.
They're spread out in the Midwest, which I am a favor of because I'm from there. I've not ever been one, but it's doing great. They sell pizza. It's like a, gas station looking place.
$8 billion market cap. Wow.
They have like 2,400 stores. Are you on Casey?
Yeah.
They have 2,400 locations.
A share. I could see why no one hears of it. So,
what is it?
People hate buying stocks. They think that if they buy a stock at $218, they have less of a chance to make more money if it's a dollar stock. But it's all about percentages.
Exactly.
One goes up 20%, the other goes up 20%. It's fine, but I can't buy. It's too expensive to buy the $218 stock. That's okay though.
Do any of these stocks shock you? McDonald's, Pepsi, Campbell's Soup, Hershey's.
No, because especially McDonald's, Pepsi, no, that doesn't. That's
C.H. Robinson Worldwide.
Too, if you look at McDonald's too, it's. I mean, McDonald's is just. When you're in a recession, people are going to go to McDonald's, right? So that doesn't surprise me.
I was surprised about C.H. Robinson, great trucking company. We've done Knight Swift in the past, just because at first thought, hey, trucking is going crazy. You had this huge supply chain crunch. You had a lot of people doing that, but then you have a lot higher costs with wages and oil. I was actually surprised to see that still up there. The main takeaway here is we can go on and on and on. Waste management, that probably doesn't shock you. Yep. The point is that these are great businesses. And yeah, in the last 3 months, you've seen extreme volatility. But the point is, I'm not saying put your head in the sand and I'm a permable. But the point is, when we talk about meme stocks, AMC, we have fun with that. But that's not investing. That's just simply gambling. And I think you'd agree with me, Frank. If you want to gamble, you should go to Vegas. You can have a hell of a lot more time and a lot better scenery. So if you want to gamble in the stocks, you can. That's fine. But this just proves that as long as you are not going to be trading, you can buy great, well-run companies like this. And for a 3-month period, and even seeing crazy market moves, the odds are still well in your favor to hold on to these stocks because these are investments. You are investing in great businesses with solid management teams that actually make money, that provide goods and services to people. Yeah, they may fluctuate with macroeconomics, but there's 250 to 300 names I could go over on this.
It is waste management too. You're looking at a year out, just and you got a little volatility from 170 to 140, but this thing was 140 just for those traders out there, the people who, it was 140 June 20th, and now it's 173. And it was just a lot of volatility with these names because the market's all over the place. You're going to see this even big names, especially small names, guys.
Absolutely.
The volatility right now with the Fed, no clue what the hell they're doing. They're catching up, and they want to catch up to the point where they're trying. They're trying to raise rates more aggressively than almost any time in the history of this country. And they're like, but we're cool. We're not going to see a recession, though. We're going to be fine. I'm like, these guys have no clue. I understand the message. I understand you don't want to create panic, right? And you don't, but just being so wrong on the other end and having to catch up right now, it's just for anyone out there, you're looking at the Fed going, holy shit. I wasn't worried, but now I'm a little worried that they're going to really push past 3.5%. And I think, you're already seeing the effects of it and just demand is falling off a cliff. And you got to talk to people. And guys, if you're not seeing, might not see it in certain industries. Say Phil Bo just went on and said how autos, they're just seeing massive orders. These are orders, I placed orders for $100, $200 for EVs and stuff like that. These guys have massive amount of EVs that are now 25%, 30% more expensive. And those prices are going higher. And don't worry about whatever just passing the inflation reduction bill. We're going to spend more money, inflation reduction bill, right? So they're increasing the amount of tax credits, but already Ford, GM already raised prices. They're expecting to place on these prices in the next month or two just to account for those. So, the expenses, and if Ford comes out and says we can't make money on EVs right now, and you're spending $50 billion over the next few years to go all in EVs, you better hope there's freaking demand. And it's not going to come if we're in a recession. I don't give a shit who you are. It's not going to come. I know that, believe me, I'm in the market for cars, and I had to buy a car that was fully loaded, that half the stuff I didn't want, or I wasn't getting a car, right? I mean, there's nothing on the lots. I get it. I'm in the industry. I understand. But holy cow, you think people are going to pay that much more? And I know EVs are the future and stuff like that, and I get it, but man, I could see them purchasing the gas guzzling vehicles and just saying, okay, I'm going to do this instead of the whole learning curve or whatever. But yeah, it was worth it. But now with the prices skyrocketing, it's just, I don't know. I don't see the demand that they're seeing based on $200, putting $200 down, $300, maybe $1,000 down on the car that you were going to buy for $45,000 that was supposed to be available a year ago. And now it's not even available yet, but now that car is $66,000, some of these things. That's how much it went from 45 to 50, 55. I mean, the prices are unbelievable, and they keep going higher and higher. So you're going to see demand fall off. I want to hear from you guys, frankcurzioresearch.com, because a lot of people here, and it's not just here. I'm hearing from people in Europe that listen to this podcast. I'm hearing from people in China, the podcast, in the past few months. But they're just saying immediately, like everything was booming, and holy shit, it was like a light switch, and it just got turned off. That's what you're going to see. I don't know if the Fed gets that, Daniel. I don't think they do. I don't think they see real people or look at it in that terms. I think they're all looking at data that is usually lagging, and they're going to maybe focus on that. But holy cow, I'm just worried that they're going to get a little out of control.
Yeah, well, of course they will. Last one here. This is kind of fun. I can't resist myself, Frank. You think H&R Block is near a 52-week high because the 80,000 IRS agents coming to look for us?
Maybe. Maybe, but then again, those guys. I'm
sorry,
you know what? Those guys. Yeah, I know, but the IRS agents aren't targeting the people that go to H&R Block. So I can tell you that right now.
Well, I'm saying people are going to go to tax services because now they don't want to do it themselves because now that you got to have somebody to hide behind.
Well, I mean, they're hiring like big accountants. That's the people that they're going after, where all those loopholes and stuff like that. And it's they're going after like the high end, middle class, and high end, and all loopholes that are, and there's so many loopholes because of the government, because of the way it is. I love it. Yeah, I gotta.
Oh, see, I got you. See,
I gotta give Donald Trump some credit here. I love when he said this, because he was on stage and they were saying, "Well, look at you and your businesses, and you take advantage of it." And he goes, "Yes, I'm taking advantage of the laws that you guys created. I'm a businessman. That's what I do." And he goes, "That's how I know how to change them, because I know every loophole."
Yep.
And I appreciated that, because he's like, if you own a business, that's kind of what you're supposed to do. You're doing it legally, right? So you get the best freaking tax people, tax accountants, everything. And it's going to be interesting that I think there's 75,000, and now they're going to have another 82,000 on top of that. By the way, I think they're armed now. They're armed a lot of shoot people.
Oh yeah, that's crazy. The job description. Holy hell.
What country?
To your point, I listened to a great guy. I know his name and I can't think of it right now, and I apologize. But I listened to. He just made the most simplest point when it came to taxes, and he said, "Listen, the tax code is essentially a roadmap or a treasure map. They tell you what they will give you the biggest discounts on and things like that. You just have to follow it." Mm-hmm. And I remember that guy, big CPA. I just remember thinking, wow, that is the most wonderful, simplistic way to look at taxes, instead of just dreading it and hating it and worrying about it like all of us do. And that's why a lot of people do real estate and different things. And anyway, when you look at it like that, hey, this is what they tell you to do and how to manage things and what big write-offs you get. So anyway, I had to have some fun with that.
The write-offs that you got to get with solar.
I was surprised. Hell, we're past tax season. I know people got to do quarterly and all that, but I was surprised to see H&R Block up there. You have a lot of utilities and things like that. The big takeaway here is, people, we are in an environment where you want to be boring, and the easy money is just growth to the moon is over, as long as the Fed is going to raise rates or rates stay high. Yep. So keep that in the back of your mind, but do not defer to just sitting on the sidelines, because as we've just gone through a handful of great companies, well-run companies, they're doing very well even amidst all the economic uncertainty.
A good job on that, Dan, because you don't realize that when you're watching TV, right? When you watch, it's just like, holy cow. I mean, right now, the rise of TikTok,
all they do is talk about Apple and Microsoft.
Of the fall. Then they're talking about Jackson Hole. Like, everything is like just conditioning you. Remember, these are daily services, and even when there's no news, they got to give you news. And now there's not really earnings season, there's not a lot of news. They just, we're not really used to talking about Jackson Hole 3-4 days before it happens. But it's constantly filtered, and what you're going to pay attention to is the shit that fears you the most. And when you turn this stuff off, and you wouldn't know that many companies are doing that well, that are just, especially with the ups and downs of the market, especially with the recent downturn in the past 3 days. Again, it seems like the markets are down 10, 15% in the past 3 days, doesn't it? It feels like it's a lot more than that.
Yeah, absolutely.
Like, what if SP 500 didn't break through its 200-day moving average? It came within the handle. Guys, if you're looking at that data, that rarely ever happens with the SP 500. But there was great data, and this is done by a guy at Jefferies, and he showed that when that happens and you come off, the gains over the next 3 months and 6 months are pretty significant. You would think that's crazy. It came off, now it's going to crash. But just you got to look at the data. You can't just listen to anybody and say, holy shit, technicals, it hit the 200, it came right off. That's a negative side, and we're going to crash. If you're looking at the data when that happened, the next 3 months and 6 month period, the S&P usually breaks through that and does well. So I'm not saying it's going to happen. I'm just saying there's two sides to every story. It depends who you want to listen to. And hopefully that's why you guys listen to the podcast. We tell it straight, whether people like it or not. But we tell the truth and try to get an edge on a lot of the idiots that are pointing people in the wrong direction, because that results in pretty good trades if we're taking the other end, if people really know the true stories, and kind of how I made my live in this market for over 30 years. So hopefully that continues. But great stuff in your research today. Awesome. Hopefully your back feels better. Maybe just go golfing 3 times a week instead of 4 times a week. That usually helps.
It's great you're back. Glad to see you back in the office.
Yeah, right. I see. I'm glad to be back in the office anyway. But thanks so much for coming on, Dan. I really appreciate it.
Cheers.
And guys, questions, comments, Daniel?
Daniel, CurzioResearch.com.
My email is frankcurzioresearch.com. Really appreciate all the support. And I'll see you guys tomorrow with a fantastic interview. She did the conference. Someone has been featured pretty much everywhere, like Fox, NBC, ABC News, Inside Edition, tons of media outlets, magazines, one of the most sought after marketers with mass social media following, also a TED Talk speaker. I'll leave it there. I'll let you guys try to figure it out. But really great guy, and I had a fantastic interview with him, which you're going to see for the first time tomorrow. So make sure you tune in. I'll see you then. Take care.